So today we are going to talk about tax mitigation or tax planning. In the tax planning world, there are literally hundreds of tax breaks, genuine, legitimate tax breaks that the government have introduced to help both companies and individuals reduce their tax burden. At Hentons, we are very much focused on tax mitigation. Tax breaks are available to both companies and to individuals. When we give tax advice, we need to think about joint up tax planning, as often we are advising owner-managed businesses. So that means advising both the companies and the director shareholders of those companies. So it's joined up tax planning to think how we can mitigate both corporate taxes and individual taxes. An example would be remuneration planning. What is the best way for the director shareholder to pay themselves? What about the structure of the business? Can we look at changing the entity through which the business trades? What about incentivizing the workers? Tax efficient bonus structures or share options for the employees? What about exit strategy? What is our aim, or what are our goals? How long do we envisage being in business for? What sort of sales price would we like to get for our business? We need to tax plan around an exit. Timing of tax planning is crucial. Often we need to tax plan within the year. So before we get to the year end, we meet up with the owners and directors of companies and we go through tax planning options. Individual tax planning, that often is governed by the tax year for individuals, which is the 5th of April. So we'd need to do tax planning for individuals before the 5th of April each year. Examples being things like ISAs, making sure that we maximise our ISA allowance, and pension contributions.
As managing partner of Hentons and as a director of a property investment group, I've been privileged to advise some extraordinarily successful entrepreneurs. Over the last 2 decades, I've been helping businesses overcome the challenges they face during their economic development. I've learned that running a successful business is not just about having the right product in the right place at the right price. Successful entrepreneurs are able to demonstrate incredible dedication, self-resilience, an absolute belief in what they do, and an outright refusal to be defeated. The journey of an entrepreneur is difficult. The personal demands are huge. You need to focus on a complex combination of strategy, sales, finance, technology, and people. However, with success can come great reward, both from a financial perspective and from your own personal development. It's incredibly motivating to see your business grow, to develop a team, to be recognised by your peers, and to reap the rewards of your hard work. I'd advise any entrepreneur to remain focused on what matters, believe in what you do, strive to achieve the very best. Follow your instincts, but keep the counsel of your trusted advisor by your side.
What I've learned over 20 years in practice is the first thing an entrepreneur needs is the courage to make that leap, to step out of the comfort zone of employment and into the realms of being your own boss. Now this will be a scary thought, and it's a thing that puts most people off, but if you believe in yourself, then back yourself. I've seen firsthand from here that you can either be a success or a failure. And my top tips for being a success would be, don't try to learn everything you need to know to be in business. You will have skill gaps, accept that and trust in others. Either put people on your payroll or engage professional advisors to assist you along the way. Stick to what you know. Don't try and do something you don't understand or is alien to you. Being passionate about what you do will get you a long way. It's what will motivate you and make you strive for success. And finally, let's not forget luck. The right break, connection, or just pure timing could be the difference between success and failure. Don't underplay the importance of being in the right place, the right time, the right idea. The margin between success and failure is tight, but for those who make it, the rewards are worth it, so good luck.
Budgets, forecasts, strategic plans are clearly best practice for business, but unless you measure your actual progress, how do you know how well you're doing against those plans? Size and complexity of your business will determine how you go about measuring and how often, but the important thing is to take some early action. Is your gross margin fallen because you should be passing on some cost rises, or is it to do with a mix of sales? Is your cash flow becoming tight because of a credit control issue, or is it to do with an overspend in a particular area? Business is complex, it's not static, it's fluid. Here at Hentons we can help you to measure the actual results, to interpret those results, and more importantly take some action to improve your business going forward.
I predominantly work with owner-managed SMEs with turnover ranging between £100,000 and £40 million. Having worked in practice for over 15 years, I've gained an insight into how successful entrepreneurs manage their businesses. At the early stage of the business life cycle, the business concept should be simple and you should persevere with this idea. Also at the early stage, you need to ensure you have accurate forecasts so that you can measure and meet your expectations. In addition to this, you do not want to overspend. A successful entrepreneur ensures he has timely information in order to make informed decisions. Management accounts prepared on a monthly basis that are prepared accurately will allow you to do this. At Hentons, I meet my clients on a regular basis to ensure I challenge them on their financials. Staff are pivotal to the success of a business. A cohesive team will allow you to promote business growth. Surround yourself with like-minded people who believe in you and your business. Keep it simple and believe in yourself.
How do I start up a business? Well, from the outset, you need to decide on the business structure. For a low volume business, it may be more cost effective to remain unincorporated. This is where the proprietor is the business themselves, and as a result, there is unlimited liability. If you are to trade as an unincorporated business, you need to register with HM Revenue and Customs to complete a self-assessment return. On this return, you will account for your income tax and your national insurance contributions. For larger businesses, you may want to consider incorporation. This is where you form a separate legal entity to trade through, normally a limited company. This limited company will be registered at Companies House. Before you form the company, you need to decide on its name, who the directors will be, and who the shareholders will be. The directors manage the business and the shareholders own the business. Once you've completed your first year in business, you will need to drop a set of accounts to show what you've earned. If you're an unincorporated business, you will need to report these earnings on your self-assessment return. For a limited company, you will report these earnings on a corporation tax return. Limited companies must also file their accounts at Companies House. So whether you're incorporated or unincorporated, you must also open a bank account in the business's own name. You must also put a system in place to record the business transactions. Your accountant should be able to advise you on all these bullet points.
So what is an audit? An audit is an objective examination of a company's books and records and associated accounts to see if they show a true and fair view of the transaction they claim to represent. In the UK, under UK law, all medium-sized companies or greater must have an annual audit from an independent auditor. That auditor comes along, does an audit, and then prepares an audit report, giving an opinion as to whether the accounts show a true and fair view. And that audit report is then included in the company's financial statements. So what is a medium-sized company? Well, there are three size criteria, three thresholds which must be considered. Firstly, turnover. If you have an annual turnover of £10.1 million or more, that makes you medium-sized. Secondly, gross assets as per the balance sheet. Here the threshold is £5.2 million, gross assets being fixed assets plus your current assets. Finally, the number of average employees. Here the threshold is 50. If a company exceeds two or more of those three criteria, they are medium-sized at least and must have an annual audit. If you don't meet two of those three criteria, you qualify as small and you do not need to have an audit. However, many companies in this situation do choose to voluntarily have an audit because they may have external debt or other funders such as bankers who need to see audited accounts. If you have any questions at all, please do get in touch and we'd be delighted to help.
Why outsource payroll? The main reason to outsource payroll is the time it takes when you're paying your employees. That could be every month or weekly, and that time can be utilised on other aspects of the business instead of having to do that. You've also got your software costs, so whatever software you use, whether it be Sage or Irish, you'll be paying for that, and if you do compare that to the cost of outsourcing it to Hentons, there shouldn't be that much difference there. You've got your difficulties with payroll as well, so your main difficulties are your new starters or your leavers, your holiday entitlements, and you've got to make sure your submissions are sent every single period. If they're not sent on time, you are likely to get penalties from HMRC, which start from around £100 per late submission. The other difficulty is if it does go wrong mid-tax year, you'll start to get discrepancies with HMRC where they can get on your case about that, start to chase underpayments or an overpayment in some cases. Last of all, you've got your legislation that you need to make sure you're up to date with. So most employers have stage 4 auto enrolment now. So that's your pensions, which you need to make sure are the minimum, which is 1% at the minute, which will be going up from April and every tax year after that. You've also got your benefits in kind from April 2018, so that's things like your car benefits that you might give to employees or vouchers. From April there is new legislation there, so you need to make sure that's taken into consideration as well. And last of all, you've got your National Minimum Wage Act that crops up every single year, and that's just making sure each pay period you're paying them the national minimum.
Points to consider before making investment decisions. Review your needs, set your goals and objectives. It's well worth taking the time to think about what you really want from your investments. Knowing yourself, your needs, your goals, as well as your appetite for risk is usually a good place to start. Consider how long you can invest for. Think about how soon you need to get your money back. Make an investment plan. This will help you identify the types of product that could be suitable for you. Have an emergency fund. A good rule of thumb is to start with low risk investments such as cash ISAs and premium bonds. Diversification. It's a basic rule of investing that to improve your chance of a better return, you have to accept more risk. Diversification helps you reduce that risk. Decide how hands-on to be. Are you happy to make the investment decisions yourself, or do you need the help of an advisor? Try and maximise tax-efficient investments by putting the maximum you can into ISAs, premium bonds and pension plans. Review periodically, as regular reviews will make sure that you're on track to reach your goal. And finally, protect yourself. Try and avoid high-risk products unless you're fully aware of the risks.
Who is exempt from audit? Well, to determine if your company is exempt from audit, you will need to consider the following criteria, and that is turnover of 10.1 million, turnover of 10.2 million, gross assets of 5.1 million, and this comprises fixed assets and current assets, and also employee numbers of 50. If you breach 2 of the 3 criteria, then you are required to have a statutory audit. If it's not a requirement and you are a limited company or a limited liability partnership, you will still need to prepare accounts and submit them to Companies House. These will need to be in a statutory format, and also they will need to comprise any recent changes in legislation. These will need to be submitted within 9 months of the year end. So if you have a March year end, they will need to be submitted by the 31st of December. If you are a limited company, you will also need to prepare and submit a corporation tax return to HM Revenue and Customs. Any tax due will be payable within 9 months and a day of the year end, and unlike the accounts, the tax return is actually due for submission 12 months after the year end. So in this instance, if it was a March year end, you would need to submit by the following March. If you are a limited liability partnership, you will need to prepare and submit a tax return under self-assessment, where the normal self-assessment ruling applies. These tax returns will need to be submitted by the 31st of January each year. With regards to record keeping, HMRC advise that you should keep the records for at least 6 years following the previous full financial year. Basic records would include things like bank statements, loan statements, any sort of company credit card statements. You would need to keep copies of sales invoices and purchase invoices, whether that be a supplier invoice or an expense receipt. You would also need to keep things like VAT returns and wage records as well. Essentially, you just need to keep a record of everything, all the monies in and out of the business. It's not a requirement to keep paper records. It's absolutely fine to keep electronic records, especially as today a lot of companies are moving on to a paperless office policy. So today a lot of companies are choosing to maintain their record keeping on a cloud-based software. The general consensus is that it's easier, more accessible, and will assist with the transition to making tax digital, which will be happening within the next few years.
GP accounts are somewhat more complicated. So what makes a GP accounts different? There are considerably more lines of income and expenses. There is often a significant gap between income earned and income received. Hence, accruals are key for these accounts. One needs to carefully understand prior allocation, as certain items of income and expenses are top sliced to an individual's. It's also important for GPs to note that profits are not the same as drawings. Tax and pensions are calculated on profit rather than drawings. Partners' pension payments can be complicated, as partners effectively pays both employers' and employees' contributions, which are accounted in different ways. GP accounts is a specialist area that requires expertise and understanding of the industry. Hence, you would want to have a medical specialist accountant at your side.
So the question for me today is, how should I get my business ready to sell? Now, many advisors suggest you should start planning the sale of your business 2 or even 3 years in advance. I say this, your business should be capable of being sold today, not tomorrow, not next week, not in 2 or 3 years' time, but today. So the real question is, are you fit to sell? Ask yourselves some basic questions. Does the business depend on me? If I'm not there, will it still operate without me? Are my management team capable of running the business without me? How good is my management information systems? How well do I comply with laws and regulations? What do the numbers look like? What are my objectives? Having thought about the answers to those questions, and you feel that opportunity isn't going to come knocking, then the answer is simple. Build a door. And don't worry, we will help you build it.
Lifelong learning is the key to business success. As business owners, we are constantly looking to evolve, to learn, to absorb new ideas, take on board fresh challenges. Never be afraid to listen. You don't always know everything about every subject. Always be prepared to surround yourself with people who may know more than you about particular subjects. Don't think that you know it all. Don't be afraid to challenge the status quo. Always look to critique processes. Try and be more efficient in everything that you do. Even if it worked okay in the past, chances are you can always tweak something to make it better, make it even slicker. In business, we're always trying to save time. That is the one constant constraint. It's a precious commodity. Communication is the #1 topic which lets down many businesses and many managers. Communication is not difficult. Communication should be easy. It only takes a few moments to send an email, to make a quick call, to send someone a text even. And in this digital age, it can be done in seconds. So do not overlook communication. That is the key to a successful business. No matter what type of business you are in, you need to embrace communication and champion it throughout your organization.
Tax compliance is basically the provision of information to revenue and customs in connection with your tax affairs. It impacts upon all taxes, for example, self-assessment tax returns for your income tax, or perhaps P11Ds for employee benefits. It's important to remain tax compliant, not only because it saves you tax, but or ensures that the right amount of tax is paid, but also there's interest and penalties if the forms you have are submitted late or are incorrect. One of the best ways in which you can go about doing this is to remain mindful of the obligations that are placed upon you and be aware of the deadlines that you have coming up, and proactively try and gather the information that's going to be required well in advance of the deadline that you have to meet. A good way of doing this is to, perhaps for your income tax, have a cardboard folder, something like that you keep during the year. And when you incur expenses, perhaps on your rental property, or you have income like a dividend voucher come through the post, just pop them in the wallet as you go along. And when the tax year ends, you've got that information ready to pass on to your tax advisor in order to complete your tax return. This is a much better way than waiting till the deadline's almost upon you and then desperately trying to remember exactly what happened, what figures you received, and takes a lot of the stress out of your tax compliance obligations.
We can't see your hands really anyway. You can just be natural, whatever you feel natural doing.
Okay. Testing, can you hear that okay?
Yeah, so whenever you're ready, you can just go.
So at Hentons, we are very much, for fuck's sake. Timing is crucial. whether it's, oh for fuck's sake, I lost it again. Right, let's keep going. Right, so examples being things like bollocks.
Yeah, that's it. Okay, in your own time.
Today we're talking about business tips, inspirational ideas.
So it's not today we're talking about, just launch into your
Okay,
things.
okay.
What's your starting?
All right, okay.
Lifelong learning
All right.
and success.
Yeah, yeah.
So just kind of launch in with that.
Yeah. Quality of product must be sought after. That's fucking shit. Right. Communication is crucial. Communication is the number one. Communication. I'll just keep going. Right. Communication is not difficult. Communication should be easy.
Is that okay?
That's good.
So let's get the other camera on and then we're good to go. Looking lovely.
Do you edit it so it looks like I've done makeup?
Yeah, well, that's completely lined, you know.
None of these lines.
We brush everything.
You've also got your national minimum wage that you need to make sure every time you pay your employees, you're paying them the minimum amount.
In suits.
I really want the women to do it as well.
You should always embrace technology. Don't be afraid to use the new mediums such as social media. What else we got? Social media.
I forgot the next bit. Sorry. Sorry. I forgot what the next bit was. Okay. What was the other bit? There's another bit at the end, but it was just about it not being difficult. It's easy to.
Do you want to do a little closing bit, like a little finish off?
Yeah. Oh dear.
Oh, is that your phone?
That's my phone going off. That's okay. Sorry, I've gone to bits a bit now.
All of these are genuine ways that you can be.
This is one, this is going a little bit long, so...
Oh, you can cut a lot of that shit then. Yeah, pretty much so. Then.
Perfect.
Let's have a little look at that.